Welcome back to Alpha Recap, your after-hours market wrap from stockalpha.ai. Markets were closed for the day, and we've got a lot to unpack from May 13th. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Today, three stories really dominated. Apple pushing back on proposed European rules around Google services, Baidu rolling out agent products and pushing a metric called daily active agents, and Walmart cutting about 1,000 corporate roles.
Right. Those three hit tech, AI, and retail all at once. It felt like a cross-sector day where policy, product metrics, and efficiency all showed up in the headlines.
Exactly. So, what really stands out here is how structural these items feel, not just isolated headlines.
Let's start with the regulation angle. Apple publicly criticized measures in Europe that would widen access to Google services. Analysts flagged that this could change how default products and ad stacks perform for platform owners.
Yeah, and that pushes headline risk into the short term. Companies like Apple and Google have to think about how defaults drive engagement and ad revenue, and regulators changing the rules can reweight that math quickly.
Analysts pointed to a set of data points used to rebalance market share scenarios. About 62%, about 27%, and basically zero. And said those inputs could meaningfully shift margins under different regulatory outcomes.
Hold on, say that again? Basically zero?
Yeah, basically zero. The idea is some lanes of the ad or service stack are negligible today, but regulators could make them more relevant. That creates a lot of modeling scenarios.
And that leads to volatility risk. Public rows with regulators can drive headlines that move large caps even when the underlying business is stable.
Right. Expect follow-on statements, lobbying disclosures, and eventual guidance updates once formal texts are released. Companies will likely try to quantify the revenue and engagement impacts, but it will take time.
Noted. Okay, switching gears, and this is a big one. Baidu introduced a set of agent products, like DoMate, plus coding and enterprise editions, and pushed daily active agents, DAA, as a potential usage KPI.
This felt like the moment the industry tries to settle on an engagement metric for agent-first products, similar to how monthly active users or daily active users became standard in prior cycles.
Exactly. If daily active agents, or DAA, takes hold, it changes how analysts model engagement, monetization, and lifetime value for these AI products. It's about turning interaction counts into revenue assumptions.
And Baidu is broadening monetization by targeting consumers with a general purpose agent, developers with a coding product, and enterprises with a separate edition. That helps diversify potential revenue streams.
Right, and Microsoft's partner moves, like Sunrise Technologies opening a Canada office, tie into this. Partners using Microsoft AI stacks could become distribution channels for agent offerings, accelerating adoption.
Analysts said the key signals to watch are DAA growth rates, how usage converts into paid contracts or bookings, and whether companies disclose enterprise deals that tie usage to revenue.
So, when will we know if DAA matters? Probably when someone shows meaningful conversion from free or trial agent use into paid enterprise contracts.
Exactly. Early adoption metrics will be noisy, but quarterly disclosures that tie agent usage to bookings will be the validation signal.
Quick reaction.
Wow, that's big.
Not what anyone expected.
Moving on to corporate efficiency. Walmart said it was cutting about 1,000 corporate roles to simplify operations. Analysts flagged that this signals an efficiency push, but the net margin benefit depends on one-time restructuring costs.
Yeah, the headline read as cost discipline. Companies are either trimming roles or promoting operational specialists, like Ajinomoto Foods North America promoting a supply chain leader to CEO, which shows the priority is execution.
And small hiring notes matter too. JP Morgan converting a Rutgers intern to a full-time markets analyst is minor, but it's a visible sign of steady talent pipelines into banks, which feeds long-term execution.
Right. The pattern is clear. Cut where you can, and put operations people in charge where you need reliability.
Let's touch the industrial and supply chain tech stories. Brigade launched a BackSense Radar OSD product That's a radar plus camera on-screen display for heavy vehicles. And GHX rolled out an orchestration platform plus a co-design initiative aimed at healthcare supply chains.
Those are classic digitization plays. Allied Market Research also projected the global supply chain management market to reach about $94 billion by 2034, at roughly an 11% compound annual growth rate.
That's a big multi-year tailwind for software and hardware vendors that can lock in recurring revenue by proving efficiency or safety gains.
Which feeds into enterprise procurement decisions. If you can show measurable cost avoidance or safety improvements, customers will stick with you. Recurring revenue follows.
Let's talk market flows. We saw heavy trading in a few names that often reflect retail and momentum flows. NVIDIA traded heavily, about 158 million shares, and finished up about 0.6% to about $220.78.
Plug Power was up about 1.1% to $3.56 on very high volume, roughly 194 million shares, signaling speculative interest.
And the Direction Daily Small Cap Bear product jumped about 2.8% to $4.71 on heavy volume, roughly 346 million shares. Those leveraged and momentum moves can amplify volatility.
Heavy volume without clear fundamental news often precedes more choppy action. Analysts said to watch follow-through in price and filings to see whether moves are genuine or speculative.
Consumer brand news. The Walt Disney Company relaunched a safety program called Disney Wild About Safety through Disney Experiences and FM. That's more than PR. It's a defensive brand move to protect guest experience and pricing power.
Totally. In consumer businesses, reputation and safety can change demand elasticity. So these relaunches are part of maintaining a competitive moat.
We should run through quick-fire updates from the briefs. Baidu rolled out DoMate and pushed DAA. Apple and Google were in a regulatory spat in Europe. Walmart cut about 1,000 corporate roles. Plug Power had heavy retail interest. Brigade launched BackSense Radar OSD. GHX launched orchestration and co-design initiatives. Sunrise Technologies opened a Canada office. Ajinomoto promoted Dave Gardner as CEO. And the supply chain market projection was about $94 billion by 2034.
Short reactions.
Interesting.
Yeah, that tracks.
Let's pause for the standard reminder. This is informational only. We're not recommending buying, selling, or holding any security, and we aren't giving personalized investment advice. Analysts note trends and data that inform scenario analysis, and listeners should use that information as input to their own research and risk frameworks.
Exactly. Objective language only. Analysts note, data suggests, momentum indicates. No specific investment instructions.
So what are the themes and patterns to take away? First, AI metrics are evolving. The push for daily active agents mirrors past shifts to monthly or daily active user metrics and will shape monetization models.
Second, regulation remains a top-line risk. When regulators move, platform economics can change faster than product cycles.
Third, efficiency is front of mind. From Walmart's cuts to operational promotions, companies are prioritizing execution and margin discipline over rapid expansion.
Fourth, enterprise digitization continues to be a durable tailwind. SCM, healthcare orchestration, and vehicle safety all point to recurring demand for integrated solutions.
And fifth, retail and momentum trading still matter. Heavy intraday volume in names like Plug Power or the small cap Bear product can amplify short-term moves.
Looking ahead, what should listeners watch tomorrow? 1. Any regulatory follow-ups in Europe on the measures Apple commented on. Formal text will materially change modeling for platform owners.
2. Usage and monetization updates from Baidu or other AI vendors that quantify DAA or tie usage to bookings. Those would validate the metric.
3. Management commentary from Walmart on cost savings and timing. Watch for one-time charges and guidance adjustments.
And 4. Volume and price action in high trade names. Plug Power, NVIDIA, the leveraged small cap Bear, for signs of momentum exhaustion or acceleration.
Also watch for enterprise customer pilots or contract announcements for Brigade, GHX, or SCM vendors. That's how product launches turn into measurable pipeline.
Before we wrap, a couple more quick thoughts. When you step back and look at this, the overlap is striking. Policy changes can change product incentives. Product metrics can change monetization forecasts. And cost cuts can reshape near-term margin expectations.
Yeah, absolutely. And these three threads, platform rules, AI engagement KPIs, and operational efficiency, intersect in ways that will show up in earnings models and guidance over the next few quarters.
Honestly, I was a bit surprised by how loudly DAA was pushed today. If it sticks, it becomes a new lens for the whole sector.
Same here, right. And the other thing is the regulatory timeline. That could be the wild card that shifts valuations quickly.
All right, quick wrap, key takeaways. Regulators are reshaping platform economics. DAA and agent metrics could become a new industry standard, and companies are focused on efficiency and execution. Those are the three threads to watch.
If you want to dig deeper into any of these stories, head to stockalpha.ai and use our Q&A feature. We'll answer your questions live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you tomorrow after the close.